Hi, Tamal. Welcome again to the Business Standard Banking Show. This week in your column, you talked about CBDC, Central Bank's digital currency, and you talked about its comparison with UPI. We'll get into that later. But first of all, I want to ask you, where is the CBDC headed since it was launched?
Well, I'm not surprised with your bit of cynicism. I mean, a lot of people are asking that. Where are we? Look at this. The wholesale project was launched last year, 2022, November, and it was followed up by a retail project in December. Now, wholesale project started with government bond trading, and as we speak, it's about over a month now. Reserve Bank of India has now started in the interbank call money market, overnight market also. They are doing it. Has it been a phenomenal success? No, actually. If you see, look at the numbers, the way it took off, and then after it's tapering off. There are multiple reasons behind that. We'll discuss that later. As far as retail is concerned, the RBI target is by December, we should have 1 million daily transactions. And I have spoken to bankers. They feel that this should be achieved by September itself. In June, I remember there are 1.3 million customers and 0.3 million merchants involved in this. Now, things are, was RBI in a hurry before the time was ripe to launch it? I don't know, but that was the time, if you remember, the cryptocurrency was the craze and RBI was fighting out. Even though CBDC has nothing to do with crypto, but it was sort of helped to creating an optics alternate to crypto. Again, I repeat, it has nothing to do with crypto. It's just a part of the payment system. Crypto is not even an asset. So this is a separate story altogether. But RBI is taking a very step-by-step approach because, wholesale is not that difficult because be it bond market or call money market, there are already digital transactions there. The money does not change hand there. But when you and me, the retail investors, are using the e-currency or CBDC, there is impact on the banking system, there is impact on the bank deposits, there could be impact on the bank's ability to lend, there could be impact on customer.
Now, I have the UPI working very well on my phone, and so do so many of us. It has been a big success. Why is it that I will shift to CBDC? What's in it for me?
Very relevant question. CBDC actually has to really compete with UPI. Now, there are two very important difference. One, as I said, beside the interest rate part, as I said, interest rate part always you can take care of it. You can have some kind of sweeping arrangement with the bank. After a certain amount, automatically the money goes from my account, my CBDC app goes back to bank. So I keep on earning interest. That bit can be taken care of. But the two major difference between UPI and CBDC is this. A, CBDC is anonymous. It's just like using paper currency. When you go back to the provision stores, buy a pouch of milk or sugar or atta, anything like that, you give 500 rupee note or you get 100 rupee note. Nobody asks. I mean, you are completely anonymous. Your note gets into the drawer of the provision store owner. Or you buy an ice cream or anything like that. So this is anonymity of us. Of course, after a certain level, like in the bank transactions also, after a certain level, if your money exceeds certain thing, then you have to put your record, etc., etc. In CBDC also, the first important part is this: absolutely anonymity. That will be the part of it. And second, more critical part is this: it's this that the cross-border transaction. The moment like you may be sending money to your children overseas or anybody else kind of thing for education and other purposes and all. And you see the kind of rent-seeking correspondent banking. It takes so much of time in different time zones, and a part of your money, a percentage of your money goes to the correspondent banks. But once you have CBDC and our CBDC is in sync with the e-currency of that respective country, then a transaction will be in a jiffy.
Now, one of the interesting things that happened last week was Finance Minister talked about inflation, and taming inflation is so critical. And the point she made was that interest rate alone is not going to do it, and there need to be supply side measures taken as well. How do you see this statement, and what is the signal for the central bank?
She has made the right kind of statement. Inflation has to be contained, right? And at this point of time, I repeat, at least at this point of time, since we feel that it is transient, it is not here for good, and it is driven by food prices, because the core inflation you see, which is a non-food, non-oil prices, which is a true reflection of demand, is gradually has been going down. But food is playing the tomato and onion, they are playing their part sport. So it has to be supply side driven. And I think there's a broad consensus. RBI will keep a very close watch, and RBI has said that. And RBI of course, have been using the other weapons that he has in its arsenal. Like, for instance, it's jacked up the CRR on a very temporary basis. So rate hike is the last resort. And my guess is probably we may not need to do that.
So rate hike is the last resort, and as you said, that it is a very politically correct statement, and a very timely statement also by Sitaraman. And other than that, thank you for enlisting the benefits of CBDC over UPI, whether it is reduction in cost, cross-border transactions, but we will have to see how it plays out against UPI in the days to come. Thank you so much, Tamal, for joining us today. We'll see you next time.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.